Hey guys, I hope you're all having a really good start to the week. Look, I just wanted to do a quick breakdown of what's happened on gold so far. But before I do that, I think I'm going to keep consistent with just running through how ICC actually works, just by doing a quick breakdown of the strategy and just for those who are new. So if you already know the strategy quite well and you want to skip this section, feel free to do that. But for those that are new and just want to get an understanding for what we're looking at before we're looking at the examples, then stay and watch this one. So I'll get straight into it. So ICC is a trend-based strategy, and ICC stands for indication, correction, and continuation. So if we're in an uptrend, we're looking for certain characteristics, and if we're in a downtrend, we're looking for certain characteristics. So if we start with an uptrend, we start with a low in the market, a high, price then makes a higher low because it's higher than the previous low, then breaks this previous high, creating a higher high because it's higher than the high before. Then what we do is at the most recent level, we always draw a level of interest. Now to note as well, this is really important, we always draw these levels on a higher time frame. My preference is always the 1 hour. You can use the 4 hour, but I reckon for simplicity's sake and for those that are new, don't confuse it too much and just stick with the 1 hour. That's my preference, but if you want to go higher, you're more than welcome to. So as we create this higher high, we then start with the first phase, which is the indication phase, right? You can see right here. Price then sells back below the level of interest where we drew on the most recent high, right? Coming back below that level of interest, still creating a higher low, so it's higher than the previous low. And that is the second phase, which is the correction phase right here, right? Then the third phase is when price stops here and then moves back above our level of interest, creating the continuation phase. And at this stage, what we're doing is we're then zooming back into the 15-minute or the 5-minute time frame, and we're looking for, again, the ICC characteristics or characteristics of an uptrend that align with the overall trend, in this case, the uptrend. So the continuation phase is here. So we're looking for entries at this level of interest, and then we're looking to take profit at the next higher high. So entry here, and then the target there. You can hold your trades for longer if you wish. My current state, what I do in terms of when I take trades, I take partial trades at halfway through from the ultimate target, and then I take my full profit at the higher high. So that's an uptrend. Now the reverse of that is the downtrend. So it's almost exactly the same, except now the market's actually heading to the downside. Again, I'll just quickly run through that. You start with a high in the market, price then makes a low, it then makes a lower high, so it's lower than the previous high, right? Then price makes a lower low. Now that's the start of our first phase, which is the indication phase. We draw our level of interest at the most recent level, which is the low here. And in the uptrend, it was the most recent level, which was the high. So level of interest is drawn. We've got our indication phase now, creating a lower low. Price then creates the second phase, which is the correction phase. Price doesn't break above this previous lower high, which is signs to say that we're in a downtrend, which is really good. Price then breaks below this level, which is the continuation phase. So at this point in time, when price is looking to come back below this level of interest, we're scaling down to a 5 and a 15-minute time frame. We're looking for ICC characteristics, or we're looking for characteristics of of a downtrend, and that's it. It seems simpler than it is. It sometimes can be quite confusing because the markets don't print perfectly. So let's jump into it now. We've had essentially two opportunities. Unfortunately, I didn't trade them because I don't trade the New York session and I don't trade the Asian session. And unfortunately, these two opportunities did happen during those times. So if we were to start with the first day of the week, which is Monday, there was an opportunity here for the New York session. So we can see price eventually, if we're looking back on this, again, guys, this is on the hourly time frame. Price has sort of been consolidating for basically 2 weeks. Just under 2 weeks. And now it's finally broken up. So Monday, during the Asian session, we broke out so strong, which is it's a crazy move. People were trying to anticipate, I believe, for the market to come back here. So this would be the indication, price to come back below this level before shooting back up, but it just didn't do that. So we don't chase the trades, we just wait for the opportunities. So let's see what happened here. So this was the low here. Price then created a high. It then did a small pullback here, creating a lower high to then create a higher high. So we know at that point in time, based on if we refer back to this chart or this drawing here, we know we've got our low, our high, our higher low, and our higher high. We've now created an indication. So we can draw our level of interest on that previous high. Perfect. So we've got that here. Now, so we've got that indication phase. Price then, that is the first phase, indication phase. Price then creates the second phase, which is the correction phase. So now what we're doing, once price gets below this level, we're then scaling down to a 15-minute time frame or a 5-minute time frame. And I believe in this instance, 5-minute time frame looked the best. So let's scale down to a 5-minute time frame and see what we've got. Okay, so now we're zoomed in. We can see this is so overtly clear that this is the indication phase. This is the correction phase. Price then hovered around this level. You definitely could have gotten in here if you were, brave. I probably wouldn't have, only because this is so similar to, it's very similar to a break and retest strategy. What I like to see, I'll just quickly draw it out. What I would potentially like to see is price to come back below like this, not create a lower low, and then start making higher lows on the smaller time frame before breaking out. That's what I'd ultimately like to see, but I can't draw the market the way that I want it, unfortunately. But there was another opportunity. So if there would have been a lot of people probably getting in this trade just purely out of fear of missing out, and if you had your stop loss below this level, it still would have worked out. Ideally, I probably would have waited for this trade here because we can see price pushed up, then pushed back down. It almost, you could almost call that equal lows. It created equal lows, but it is also, it didn't break the previous low. So whatever you want to depict that as, that's up to you. I would say that that's equal lows. So in this instance, what I would have done is I would have gotten in an entry as soon as price broke above this level here. And then let's just get that underway. So we've got entry around this level here, stops below the previous swing low, and I would have targeted the next swing high. So in that instance, we would have had a perfect or just shy of a 3-to-1 trade, which is exactly the criteria that we're looking for. So that would have been a perfect trade. And I hope you guys caught that one. Unfortunately for me, it was just too late. I trade the London session, and that's the time frame that I like sticking to. So there was trade 1 for the week, a great way to start a Monday. Let's move on to trade number 2, which happened. Let's go back to the 60-minute time frame. It actually happened during the Asian session. So let's go back. All right, here we are. So just put this here preemptively so we can talk about it. Okay, so during Tuesday, the 11th of November, we had price create its high at this point in time. Price then created a low. It then created a lower high because it didn't break previous highs. So now we're thinking, okay, price has the potential to potentially go down. So now we're looking for that indication phase. So We do eventually get that. We've got the low, the lower high, and then the lower low. So if we go back to that drawing again, guys, this is the exact characteristics of the downtrend. So we've got the high, the lower high, and then we create that indication, which is the lower low. So perfect, we've got that. So that is the indication phase. What then happens is we get the correction phase. Price corrects here, creates again, it's very similar, almost similar to the trade before, except we're in an uptrend, creating equal highs here, right? On the body of the candle, you can say that it's probably a lower high if you were to zoom in. So what I would have done at this point in time if I was trading the Asian session, let's go back to the 15-minute chart just to see what it looks like. Probably more clear on a 5-minute. If it's not clear on a 15, I would jump down to a 5. That's the best thing to do in this instance. So we can clearly see that this is the indication. This is the indication. Now this is the correction phase. Price breaks above here, doesn't break above this level here. So it's very clear that this is a lower high on the 5-minute time frame. Then we get price break down to this level here, comes to make equal lows. However, when price pulls back, it clearly doesn't break above this level, which are clear signs of a downtrend. These are characteristics of a downtrend. So what you could have done is you could have looked to take an entry right here. Okay, let's get the short position on. We've got that there. I would have put my stops above this swing level here. Generally, there's a swing level here and there's a swing level here. I, for the most part, will always go to the second swing level for my stop loss. That's just what I do. I'm a bit more conservative. But if you very much wanted to, you could have put your swing level here and then targeted the lows. I aim for the bodies of the candle. That's my preference. So if you did do that, you would have then done extremely well. I'll just correct that a little bit more. Yeah, that's pretty good. So you would have had a 4.6 to 1 trade, which is absolutely perfect. If you then, when we're more conservative like myself, then you're in the range of a 2 to 1, which is still good. But again, the preference is a 3 to 1. So those were the two trades that I've seen so far. In terms of current market outlook, let's just have a quick look and see what we've got potentially presenting. All right. So if you really look at it just in the absolute context of things, what's happening? It's sort of consolidating a little bit. So ideally, you could also consider this as a potential, like this area right here. If we're just looking at the most recent price action, you could say that this is a micro indication here because price has broken below this level. But if you were to factor in the wicks, like some people do, I factor in trading on the body of the candles. I think for me, it's just, I've always traded that way. I've always felt more comfortable trading or factoring body closures. And that's just how I've always done it. There's no specific reason. It's just always, it's always been a preference of mine. So we can see, yeah, there's a micro indication here. Potentially price could break below here. And, we could come back below this level as well. But, the price of gold, this is a very, very strong move. So to be honest, I wouldn't be surprised if maybe, I have no idea what's going to happen. So I'm just going to wait for the ICC, methodology to play out, and then I'll take a trade accordingly. But, we could come back, potentially fake people out here before moving back up again, because the overall trend, if we're then going to say a 4-hour time frame, I would say from this point onwards, if we're considering this and the overall trend, I would say that we're still very much in an uptrend on the higher, factoring in the higher time frame. So I would be feeling more comfortable about taking long positions once an ICC position does appear. I wouldn't feel so confident about taking shorts at this stage, but if the opportunity does present itself, maybe you could potentially lower or reduce your risk if you were feeling a little bit uneasy. That's probably something I would do. But again, you have to just determine what your risk parameters are and what you feel comfortable with, and stick with that. Now, I highly recommend, guys, if you haven't, continue to watch size videos. If you do find my videos helpful, then watch them as well. But I'll keep trying to do these videos to help as many people as I can. And I just wanted to say again a massive thank you to all of you for all the comments. It's been really, the feedback has been amazing. I really do appreciate it. And I'll keep putting out these videos, as often as I possibly can. But yeah, I just wanted to say a massive thank you again. The channel has grown substantially. I didn't think it would at all. At the end of the day, this was for just for me to journal my process and to help people along the way that maybe needed, just a little bit of extra help. So again, thank you so much for your time. I really appreciate it. And I'll see you guys in the next video. Thanks for watching. Bye.